Hello and welcome to the Financial Statement Review training video. At the end of this video, the goal will be for you, the client, to be able to read through these financial statements each month efficiently and effectively to better run your practice. The goal is to make good, sound financial decisions by looking at the numbers on these reports. Think of these statements as the x-rays into your practice finances. Just like you, doctor, look through x-rays to determine the best course of action for your patients, these statements should give you the insight to determine the best course of action for your practice. So let's get started. When you first pull up your financial statements off of your portal, the first page that shows up is this compilation report. There's nothing really for you to look at each month on this report. It basically tells us, and it tells anyone that looks at these financials, that all we did was take your transactions from your bank account and your credit card and compiled them into a readable financial statements. It also lets you know that we are not independent. We are not independent to your practice. Therefore, we have not audited or performed any procedures to verify the accuracy of this information other than downloading, putting them in this format. So no need for you to look at this each month. Feel free to read through it if you want. It'll be there every month, but again, you can skip this when you're looking at these. So the next 3 pages of the financial statements are really the most important. These are what's called the profit and loss statements. You can see here that we name them the statement of revenues and expenses. You might hear them as an income statement, profit and loss, lots of different names, basically to allow us CPAs to keep our jobs, right? But think of these statements as categorizing where all of the money that comes into your account and goes out of your account each month. Okay, remember, we want these to be readable. We want these to be for you each month to be able to look at these quickly, decipher what the information is telling you, and make good business decisions. Okay? So the first thing you can see here that we break out is the income. Okay? These are your practice collections. Not a whole lot for you to review necessarily on this number each month, but it's very important because based off of this number, all of your expenses down here are a percentage of this net collections number. And that'll be important as we go through and look at these different categories of expenses. Okay. The other thing to realize is that this goal percentage we have set up here in blue, for now, this goal percentage are industry standards for general dentists. Okay, once we have your first financial planning consult, these numbers will change. And instead of you comparing yourself to the industry standard, what we want to start doing is we want to compare yourself to yourself, right? We want you to each month be able to look at these and go, did I do better than I did last month? Did I do better than I did last year? And if I'm not, what can I do? What decisions can I make to do better in all of these areas? Okay. So the first thing we break out on the expenses are what we call these direct expenses. Okay, think of these costs or expenses as directly related to you seeing patients. Okay, so the first category in the direct expenses are your employee expenses. Okay, second category in direct expenses are your supplies and labs. These are two really, really important categories on your financial statements. Okay, the biggest reason is because normally these are your biggest costs, right? Your employees and your supplies and labs. Okay, employee costs, very self-explanatory. Anything related to you paying your employees, including health insurance if you do, employee benefit plans, payroll taxes, workers' compensation, actual wages will land in this bucket. Okay, it's an all-encompassing bucket for any time you pay your employees anything. Okay. The second bucket here are the supplies and labs. Okay, this is very important to understand that these costs are your one true variable costs in your practice. Okay, what do I mean by variable? The word variable in your office refers to these costs vary depending on how many patients you see. Think about it. If you had 0 patients, you would effectively have 0 supplies, right? No patients, you don't need gloves, you didn't use any masks, you didn't use any tips, you didn't use any supplies because you didn't have any patients. Okay, same with lab services, right? If you didn't have any crowns that you had to send to a lab, then you would have 0 lab expenses. Okay. And so this number is one of the numbers that we do want you to look at every single month, because you can actually bring down your costs in this area if you focus your attention on this, which in turn, of course, increases your income and your free cash flow at the end of each month to go towards your financial goals. So very important to understand, these are your variable costs. Variable, your employee costs are directly related to you seeing patients still, but even if you had no patients that day, you still probably paid your hygienist to be there ready to see patients, your front office, your assistant, etc. Okay, let's move on. And let's go down to the next page of the income statement or profit and loss. And here is where you're going to find the administrative costs. Okay, we've broken these out into 2 separate categories again. Okay, you've got your fixed admin and you've got your discretionary admin. Okay, here's how we identify which costs go in either one of these buckets. The fixed administrative expenses, think of these as the set them and forget them expenses. We want you to set all of these costs up, these expenses up, on auto pay to come out of your bank account or your credit card every single month. Think about it. These are the costs that are not going to change much from month to month, right? You're not going to call your power company every single month and haggle over your bill. You're not going to call your phone company every single month and haggle over your bill. Now, it doesn't mean you shouldn't look at these maybe once a year, twice a year, to make sure that you're not in a bad phone contract or or any other contract, right? But think about it, your rent, your rent is in a lease agreement. That's not going to change. So that's how we identify these fixed costs. We don't want you to spend, barely any time each month actually looking and making business decisions on these costs. Okay, we'd much rather you spend your time actually producing dentistry and figuring out a way to increase your collections. Okay, the next costs are discretionary. These, you do have a little bit more wiggle room every single month. These can change more frequently. And if you think about it, these aren't quote unquote necessary in any given month. Okay, doesn't mean that you shouldn't advertise. It just means that from a month-to-month basis, you usually have more discretion over how much you're going to spend in these categories. Okay. The last thing I want to talk about on this page is a really, really important concept. Okay. And I want to focus on this section down here. Okay. One of the most important numbers on your financial statements every single month is this operating income number. Okay. And even more importantly is the percentage of your operating income. Okay, remember, the top line of your financial statements, that's your collections. Okay, that's how hard you're working, right? Day in and day out, seeing patients, performing production procedures. That's you physically, sweating and making money in your company. The bottom line number of operating income is how smart you're working. Top line, how hard you're working. Bottom line, how smart you're working. Okay. Another reason this is really important is because think of this 51% of operating income. Think of it as this. Every dollar that you collect in your office, you are keeping 51 cents of that dollar, and you get to use that 51 cents to go towards your financial goals. Okay? What are those financial goals? That's something we'll determine with you later on in the onboarding process. But a few things that number has to go pay. It has to go pay your taxes. It has to pay you at home, your lifestyle spending. You have to pay your debts still with that. And then, of course, whatever's left after you pay some of those expenses are how much money you have left to build your wealth. And so that's why having this number, the higher you can have it, the smarter you're working and the quicker you can generate wealth. Okay. The other reason this number is very important, operating income, is because your taxes are based on this number. Okay. Remember, you're an S Corp owner. Whatever income is generated at the S Corp is passed down to you personally, and that's what you pay your tax on. And so for us, we use this number all year long to project how much income we think you're going to make, and therefore be able to project how much you're going to owe in taxes for the year. And we do that calculation multiple times a year to make sure that we stay on top of your tax bill and how much you're going to owe, and make sure we have a plan for that. So very important number, operating income percentage, very important to think about and make good business decisions to try and increase that number. Okay, let's move on. The third page of the income statement or statement of revenues and expenses Not a whole lot that we necessarily want you to be looking at every single month. These are, these are any expenses that are related to you and your family that aren't considered overhead or cost to actually run your practice. So here you'll see yours and your family's payroll. You'll see some other doctor perks numbers here, right? So running your auto expenses through the practice, running meals through the practice. If you take a referring dentist out to lunch, you'll see that stuff. If you're paying your personal medical insurance premiums through the office, we would advise you to do that. Even if you don't have a health plan in your office for your employees, yours and your family's premiums should be run through the practice. You'll get a deduction for those at the end of the year. You've got some interest expense, non-operating. Again, remember, you're going to pay your debt from the operating income, and this is where your interest gets deducted. You'll see depreciation on here. We don't do that throughout the year, but that's another non-operating item. So again, not a whole lot necessarily for you to look at on this page. Just be aware of what it is and that it's there if you want to look at it. Okay, that's it for the income statement. So let's keep going here. Next is the balance sheet. Okay, again, different ways to call it. Statement of assets, liabilities, and equity. A balance sheet is the more common term. Not necessarily something that we want you to look at each month. Just know that it's here. Think of the balance sheet, think of it in this way, okay? So right now, this client has $795,000 of total assets, okay? On the balance sheet, think of it this way: all of the assets in your practice have to either be owed to someone else, which are liabilities. That's what you owe to other people. The assets either have to be owed to other people or owned by yourself. Okay, that's equity. So a liability is someone you owe some amount you owe someone else. Your equity is how much you actually own of the business. Okay, and over time, these numbers switch, right? As you pay down your debts in the practice, and once you don't own any practice debt, of course, then all of the assets become yours and will turn into equity for your practice. Okay. Again, not a whole lot to necessarily review every month. Just know that this is here. Banks like to see this. We can certainly give this to any bank that needs it, and that's the balance sheet. Okay. The next two pages are what we call the trends graphs. Okay. We like to look at these on a consistent basis from PFG's perspective, because this allows us to get a good idea of what your income, what your collections, your overhead, and then of course your operating income, there's that really important number, looks like throughout the year, to try and project the rest of the year. And again, that's important because we want to project your taxes, we want to project cash flow, which comes from your operating income. And so these trends graphs are really helpful to try and project what we think will happen in the future. It's also just a good way for you, doctor, to go back and take a very quick look at where your numbers have been for the year in more of a snapshot view, from month to month, other than just looking at the individual month. So we've created these to try and be really helpful for you, doctor, to quickly and easily look at and see where your practice has been and where we think it will go. Okay, same thing on this page. The goal on these two graphs are to try and keep the blue number, right, which is the actual, try and keep the blue number underneath our target goal, right? So if we want your overhead to be 50% or lower, right, then we want to keep our actual overhead below that. Same with supplies and labs. There's those variable costs that are really important. And so if we want your target to be 13% for supplies, labs, office supplies, then we want to try and hopefully make sure each month is below that green line. Okay, let's keep going here. Okay, this page is extremely important. Remember how I said your operating income number is one of the most important numbers on the financial statements? Well, here's the absolute most important number. This surplus cash number. Okay, we're going to talk a lot more in depth about this on our financial planning consult meeting, which is the last piece of the onboarding process. But for now, what we want you to know here is this report is trying to come up with what your cash surplus priorities are, and for us to be able to easily identify how much cash you have at the end of every single month. Again, very easily identifiable. I have $20,000 in my business checking account that I should use towards my priorities. And so this report is so important that we keep it in your financial statements when you look at them, but it's so important that we will actually email you a snip of this entire report every single month, so that you as the doctor can just receive this email. You can see this number, right? And you can go and say, okay, well, I know exactly what I need to do with this number. I need to take the draw until I have 30,000 in my emergency fund. So I've got 20,000, boom, goes right into my emergency fund. The next month, if I have 20,000 again, great. I can take 10 of it out, put it in my emergency fund. Then I've checked this priority off, right? And I can start on my next priority. And I can take the rest of the surplus that month and I can pay down my student loans. Again, these priorities we're going to come up with together in our financial planning consult meeting later on. Okay. The last report on your financial statements is a cash flow report. Okay. This report is not necessarily something you have to look at every month as well. This one is really meant to, if you have a question and you just can't understand where your cash went for the month, I would start with this report, okay? This report should be able to tell us if there's any anomaly that happened in that month that we didn't normally do. So for instance, let's say one of your priorities was to pay off your practice note. Well, in the month, what you would see is this number, debt reduction, would be larger than the prior months if you had surplus and you put it all towards your practice note. then this would quickly and easily identify, oh, that's right, we put a big chunk of money towards our towards our practice note or any debt on the business. Okay, because this just has a starting cash number and an ending cash number, and it basically just consolidates all of those income statement and balance sheet items into one report, hopefully being easy for you to read and quickly see where did my cash go for the month. And that's it for the actual reports on your financial statements that you'll receive every single month. The last thing I want to point out, and one thing that we want you, doctor, to look at every single month, is to look at this account. Okay? I apologize. Let me back up 1 second. After you get done with the cash flow report, the next 10, 12, 15 pages of your financial statements are just what's called this transactions list. Okay? Transactions list. And this basically gives you a breakdown where every single bank transaction or credit card transaction landed in your financial statements. Okay, and so one of the really important numbers and accounts in your financial statements is this draw not with payroll. Okay, remember, one of the goals with doing these every single month is to accumulate all of your transactions and get a tax deduction for all of your business expenses. Okay, and for this is the one account on your financial statements that you will not actually get a business deduction. So for us at PFG, what we do is we look at every transaction each month, and if it looks like something that might be a personal expense instead of a business expense, we will put it here and you won't get a deduction for it. And so what we want you to do, doctor, every month is to look at this report, look at this account, 3003 draw not with payroll, and if there's a number in here that is an actual business expense, to just reach out to me, reach out to your financial planner or your accountant, and let them know, hey, this expense was an actual business expense. Please move it into, meals or supplies or whatever it is. Okay. So that's it for the financial statement review training video. If you have any questions about how to read these, we can set up calls with your planner to go through these, and we'll go through these together when we have that call during the onboarding process. So thank you very much, and goodbye.